Okay, so Tara, we've had quite the last couple of, I call it maybe the last week, where
Yeah.
the mortgage-backed security market is not liking a variety of things, but it has led to an increase in rates. So kind of walk us through, we're down 24 on the day. Let's just give some insight overall as to, what is happening with interest rates and what real estate agents and home buyers can expect if they are starting the process today.
Yeah. So I would say, the downturn, from the beginning of the year, I mean, as we look at the chart, we stay in a really nice range, right? If you go all the way back to January, it's been up, it's been down. And then you can see around April, let's see, what was it? I believe it was April 10th.
Yeah.
I think inflation number came out and it was still hot. Essentially, inflation is not coming down. And that is the arch enemy of mortgage rates. So that started, I'd say, this increase in interest rates. So as that bond market, these prices are going down, that means increase in interest rates. So after that, we kind of treaded water, and then a couple other things have happened over the weekend, right? We've got turmoil in the Middle East. That's got people uneasy. And then we had just some strong economic data come out. Retail sales, people are still shopping, people are still spending money. And that is, just putting pressure on the market.
Yeah, and I think, when we talk about that, a couple of other things that are impacting, hang on, let me get back over here, are impacting that. I mean, CoreLogic came out with year-over-year rents up dramatically. So again, when we think about these inflation numbers that the Fed is focused on, some of those inflation numbers include housing. And so, the thought is that just came out today. So what are the next, inflation reports going to indicate? So again, we're sharing this with you not to scare you. There are still plenty of options and strategies to help home buyers buy today. And let's face it, again, this is kind of, the secret. And the secret is there's such huge opportunity if people are in a position to be able to qualify at these higher rates because there is less competition. And Tara, I know you and I have spoken about this, but Matt, everybody sees it as far as limited inventory, buyers on the fence, demand is building and building and building. Once that thing unleashes, it is going to be mass chaos again. So again, just the reality is interest rates are higher. We've seen this before. So last October, we saw this, and certainly there were some great opportunities out there for people to buy with either price reductions and or credits to their closing cost, help them with strategies that buy down that interest rate.
Yep. I have this conversation every day, just reiterating the opportunity, always a potential for a refinance. But, with as volatile as it is, it's super important to be working with a lender that is keeping an eye on this and on those pre-calls. If we had someone pushing debt ratio in the high sixes and rates are up, I would say 1/2 to 5/8 just in the last 10 days, like that can significantly impact their qualification, just the same as the other way when rates drop.